Good morning, everybody. So, doing our research this morning on PERF, just updating some data in our table, and we came across YXT recently IPO'd a few months back, and what we found is the relative volume was picking up on this stock, so we decided to look into it. Its earnings per share at the moment was a lot higher than PERF, which we've been watching now for some time. And also we were looking at the earnings per share from its last financial year at 5 cents per share. So we're just going to quickly move over to our sheet, and as you can see, we're just going to grab some data and update the spreadsheet as we go. So we've got our free cash flow per share, and I do believe next we're going to go for our current financial year's low to high price area zone of interest that we utilize just to try to identify whether the stock is priced fairly, cheaply or expensive. So the analyst at the moment is just going to grab the low price for this year and update that, and then he's going to update the current high for the last financial year. Okay, I do believe he's going to want his net cash per share now, which should be on the balance sheet, or the income sheet I should say, I apologise. No, it is the balance sheet, I was correct. So currently net cash per share, $1.85. It's a micro cap stock in the software application industry. Currently, it's a lot lower than its average industry's price to earnings ratio, PE ratio. Okay, now we're going to go over to YXT. We're going to do exactly the same process. Now, earlier this morning, we did put in our guided ideas of interest, or areas of interest, key areas where we would mark off potential rebounds, support and resistance. As I say in their previous videos, we do not use trend lines. Absolute nonsense. Do not use trend lines, a waste of time. So, this is a live video, just grabbing the data that we require to monitor this stock throughout the year. It is going to be added now to our list of stocks. I'll go over to the balance sheet and get our net cash per share. $7.36. Look at that. That's really good, if I'm being honest with you. But as I say, they have got a lot of debt on the income statement at the moment, and obviously we're assuming because it's newly floated, it's had to take a loan of some sort to allow it to operate. So what are we doing now? We're looking at the profile, so we're just showing you there that it's under the software application, and that's the reason why we're putting it in, and it'll automatically grab from our formulated sheet the industry's current average PE, which is 69 times lower. Obviously that's quite obvious to you. It's 69 times lower than the current average PE for this industry. Revenue is, what's that, 12 million off there or thereabouts, and your net income is 67 million and 5 million. So they are making a hell of a lot more money at this present time. I do wish they should have some sort of debt. They haven't given any free cash flow yet per share, that FCF, free cash flow per share, but as you can clearly see, the relative volume has dramatically picked up. 93% at the moment, and we're just going to go across. You can see the RSI is being oversold now for a number of weeks, and it is slowly creeping up towards the 30 mark. We do predict that more accumulation of shares will start to build up as investors realise this stock. I mean, we've literally only just realised this stock ourselves, so yes, we will be getting into position today.